You guys have heard me talk a lot about the problems with condos lately. Well, today I'm going to talk about it some more because some new stuff has come to my attention that I think is important for everybody to know because, a lot of people buy condos because they can't afford a house, guys. Condos are generally a lot cheaper than buying a house pretty much across the board, no matter where you look in the country. And also, they're usually located in the most convenient locations in areas where there's a lot more housing density and there are no single-family homes. So buying a condo is going to be a popular thing for the foreseeable future, especially as housing continues to be unaffordable. But here's something to look out for, okay? Because you see all these buildings behind me are very old. Okay, and they're probably, I don't know how old they are, but a lot of these buildings were probably built in like the 50s, the 60s, maybe even some of them the 1940s, okay? And buildings that are this old have seen a lot of deferred maintenance. I can even tell by this brown one behind me. It's not looking too good these days. While buildings like that one back there might be spared from Florida's new condo laws when it comes to having all their financials in order, making sure they have enough reserves, buildings that are 3 stories or taller are not. So even that building back there, that's only 2 stories, so it'll be exempt. But this one right across the street would not be exempt. That place is going to be falling in line with the new condo laws that are going to hit in 2025 in Florida. So for anybody who doesn't know, how this new law is going to work is that condo developments over 30 years old, which is 2/3 of all condos in Florida, must undergo inspections and immediately address critical defects. And it also eliminates the condo association's ability to waive reserve contributions, instead requiring that they collect the annual costs needed to repair and replace certain elements by the end of their lifespan, as determined by a 10-year structural integrity reserve study. So every building is going to have to pay for these structural integrity reserve studies, which are pretty expensive, by the way. After they get the study, they're going to have to adhere to the advice in there on how much money they should be collecting and for what. Now, on the surface, this is a good thing because it's going to prevent buildings from skipping out on the required maintenance moving forward. And obviously, a lot of places have been doing this for quite some time. Even just walking around here in Bay Harbor Islands, you kind of get a sense of which buildings have been maintained better than others, just by kind of looking at them, really. But the thing is, all these buildings, they only have until December 31st of this year, 2024, to complete these reserve studies, and by next year, they have to start contributing to those reserves by law. Here's the problem, guys. A lot of these condos are facing repair costs in the millions. Millions and millions of dollars, sometimes tens of millions of dollars, depending on how much and how long they've been deferring the maintenance. Even after spreading the costs among all the unit owners in a lot of these old buildings, it could very well be unaffordable for a lot of these unit owners. And so far, the state hasn't shown any sign of reprieve. So far, it hasn't looked like they're going to be giving in and delaying this because a lot of people are complaining they can't afford it, which I think could happen at the very last hour, the last minute. At the end of December, they're going to say, well, we're going to give you guys an extra 6 months or something to comply with this because too many buildings might go bankrupt overnight. But all that is doing is, once again, kicking the can down the road. But hey, that's what the government does. Like I talked about in my video last week, what a lot of these buildings and unit owners that are in places that can't afford to pay for these new reserves are likely going to look at selling the land underneath the building and having the building demolished and doing a condo termination and just get out of it, right? Because if you can't afford it and most of the residents can't, then it should be pretty easy to have a unanimous agreement that we should sell out to a developer and get rid of this place, right? Because the land underneath the building is still valuable. And the problem is, if people don't get organized and do this in a civil way, if there's a lot of disagreement and, a lot of people want to buy out, but there's a few people that don't, then it can lead to even more financial distress in the building and cause people to go into foreclosure and have liens put against their units, all kinds of crazy things if people can't agree. But it just continues to get worse, guys, because if you're in a building that has major financial distress, there's a high probability that nobody who writes mortgages is going to write you a loan on that property moving forward, especially once these new laws kick in. Which means if you can't get a mortgage on a property, you can't sell it to most people unless they're willing to pay cash. And if you're only accepting cash transactions, well, then the price of that place just took a significant hit, because now you just limited your pool of buyers to only people who can afford to pay cash. So basically the chickens are coming home to roost with these old buildings that have not been keeping up with the maintenance, guys. It's finally coming back to bite them in so many different ways right now. Some buildings might get lucky, like if you're in a waterfront property like this one, and say this building here is in distress and they want to get out, they're much more likely to be able to sell this place to a developer for a premium, because they're not making any more of this waterfront land, especially here in Florida. But here's a part of this story that was brought to my attention that I never thought about, that a lot of people need to start considering. Check this out, guys. Association board members, people who run the condo board, have the fiduciary duty to be proactive in bringing a proposal forward to owners and raising the alarm about what's to come if they believe their condo building will not be financially viable in the future. If the value of the land the condo complex sits on is greater than the value of the complex itself, associations need to alert owners if they're past the point of no return. So this is the key right here for a lot of different reasons. Number one, because a lot of these condo board members have no clue, guys. A lot of these buildings are run in a very amateur fashion, and the people who run these places are probably not paying attention to any of this stuff right now in many cases. I mean, you got to understand, these are the same people that have been putting band-aids on the problem for decades, and now they're supposed to automatically fully understand if the building is in financial trouble and alert the unit owners. Yeah, right, guys. I see lawsuit city coming from this, honestly, because so many people who are on these condo boards are not going to be nearly as transparent as they're supposed to be. And as soon as these people get whacked upside the head with a double or triple HOA payment next year because they weren't prepared and nobody knew this was coming, I could see a lot of these places just going down in flames, and a lot of these board members getting sued personally for negligence. These guys have clearly shown they're not the best financial operators, because if they were, then the buildings would be in good shape, right? There would be nothing to worry about, and they would have reserves. They wouldn't even be worried about this new law coming into effect, because they would already be in compliance. But one thing that's kind of unclear on how this is going to work out is once January 1st, 2025 comes around, if you have a bunch of buildings that are not in compliance, is the state of Florida just going to go around and condemn all these buildings that are not in compliance? I don't know. There's really no word on this yet, and I have no idea what's going to happen, guys. Like, we're just all along for the ride, and I'm reporting to you in real time as I learn about new things with this. One thing I can say for sure is it's going to be interesting, to say the least. But if you own a condo, it's up to you right now to take matters into your own hands and see if the building you're living in is financially viable, guys. Review the last couple years of the budget and see what's going on, and see how much money are they taking in, how much money are they paying out. Do you actually have any reserves right now? Just those things alone will give you a very clear picture of what's going on and if the building's in good financial shape or not. I don't know this for sure, but I think what you're going to see is a lot of people are just going to go into foreclosure because they're not going to have the money to pay for all the extra assessments that are going to be necessary to catch up on reserves and any special assessments that might come and all of this. And guys, the only reason I haven't run for the hills with my condo is because I know our building is pretty sound financially. Our maintenance fees are going to go up a little bit in 2025 to comply with full reserves, but we're already running a partial reserve budget, and the maintenance fee increase isn't going to be that much to get us to full reserve. So we've already been playing it safe with this for a long time, but guess what? The HOA fees are high in our building, okay? So one of the telltale signs to know if your building is complying or not is also just look at how much you're paying in HOA. If people are paying $300-400 a month, there's a very high probability you're not in compliance, even with a small building. Because even think about it, a small building, okay, you have less owners. So the maintenance fees still have to be relatively high to pay for all the expenses in the building collectively, because there's less people to pay it. And this is perfect timing too, and I came here on purpose today because I know there's a lot of development going on here in Bay Harbor Islands, and there's all these big new buildings, there's old buildings, small buildings, big buildings, and here's a brand new one right here they're putting up, and our governor, Ron DeSantis, just made it much easier to knock down an old building like the one next door and put up one like this. Now, some people are highly against this, other people are all for it. I sit somewhere in the middle, but let's take a look at what this actually means and what this is going to mean for real estate here in Florida. Now, this new law is called Senate Bill 1526 that DeSantis just signed into law. And what it does is it strips local municipalities of their authority to ban, restrict, or prevent the demolition of non-conforming and unsafe structures, okay? The exceptions are for buildings individually placed on the National Register of Historic Places, contributing structures within a historic district listed in the National Register before 2000, and single-family homes. Buildings in barrier island municipalities with a population of less than 10,000, which have at least 6 city blocks that are not located in 4 specific flood zones, are also exempt. However, buildings that only have municipal historic designation would not be saved from the wrecking ball. And this goes into effect immediately, like right now, today. So what makes a building non-conforming? Well, if they don't meet the base flood elevation for new construction under the National Flood Insurance Program, if they were found to be unsafe by a building official, or if the structures were ordered to be demolished. The reason why I'm bringing this up is because this affects the entire state, but it uniquely affects where I live down here in Miami Beach, and even a place like this in Bay Harbor Islands the most. Because as you've seen so far at my walk, there's a mix of different types of buildings here. You have like these mid-rise buildings, you have some smaller apartment buildings that are only 2 stories tall, and it's just kind of a mix of that here on the island. In Miami Beach, where I live, for example, especially if you go down by Ocean Drive, there's a bunch of buildings that are historic buildings that are designated historic by the city of Miami Beach, but those places would no longer be protected under this new Florida law, so they could easily just be demolished and they can build a new high-rise there. Whether that's a good thing or not, well, I guess that's all perspective. But for example, to show you what this looks like in real life, take this small building here. You can tell it's pretty old, probably built in like the 1950s or so, has that style. And this building, even if it's designated historic by the city of Bay Harbor Islands, it wouldn't matter. They can now sell this place to a developer who can tear it down and build something brand new here like we just saw. They would no longer be protected. So a lot of people think this is going to spur a slew of sales on buildings like this that they've just been waiting to sell, but have been unable to because of the lack of the ability to redevelop them. And I said this a bunch of times before on the channel, it's not like I'm against new buildings and redevelopment. The problem is though, guys, is that they don't build anything that people can afford anymore. So people can afford, you know, to rent or buy a place in this building here, maybe if you're lucky, right? Even under today's prices. But once they build something brand new there, you might as well kiss it goodbye. You know, that just erase the affordability for pretty much everyone once that happens. And some people like the style, like these old little buildings and stuff like that, and they want to keep the character of that for the neighborhood. But this could easily be turned into a 10-story monstrosity from now on. So whether or not you think that's a good thing is all perspective. So right now, the state of Florida is expecting a wave of demolition applications to start rolling in after this new law. And what they're saying is some developers have sat on properties in historic districts for years with the hopes that a law like this would be passed, or that their buildings would be deemed unsafe, because that would be the only way previously that you could get it torn down. There's an attorney up in Fort Lauderdale. He's saying that we've already gotten several calls from developers who have properties that they can now move forward with demolishing. He says it's going to create massive redevelopment implications for the coastal properties in the state, which is just another fancy way of saying, if you think Florida's unaffordable now, just wait till they start tearing down all these little buildings and building, you know, buildings that are 5 times more expensive or 10 times more expensive, because that's where this is headed. It syncs in the perfect timing with having the new condo laws go into effect in 2025, so that all these old buildings that aren't paying are going to have no choice but to terminate or to suck it up and pay up. So developers are going to be ripe with opportunity on places they're going to be able to choose from and buy out these distressed buildings moving forward, is what I think. This attorney says he's already working with a couple of developers for some demolition applications, and one of them's right in my town in Miami Beach, but he won't say, you know, which building it is or who the owner is, so just have to wait and see until it actually gets torn down. But this attorney says that he thinks it's really going to increase property values. He already has clients calling him saying, what property should I be looking for now that this law has passed? So he thinks it's not only going to spark sales, but we've enabled property owners to get the price they deserve for these properties. So any valuable location here in Florida that has an old building sitting on it probably just went up in value because of this, is what he's saying. I think it's too early to tell, but maybe, we'll see. But one thing I mentioned in my last video about condos and the buyouts is, even though you're going to have a lot of developers want to do this, they might not necessarily be able to afford to if they can't get the funding, because banks are in trouble right now, guys. In fact, there was a new warning issued today about 5 smaller banks in the US that have massive exposure to commercial real estate have just been hit with a big credit down rating, okay? The S&P Global Ratings downgraded 5 regional lenders to negative from stable. And these banks are First Commonwealth Financial Group, M&T Bank Corp, Synovus Financial Group, Trustmark Corp, and Valley National Bank Corp. So we're on the verge of maybe potentially seeing 5 more bank failures because of how bad their balance sheet is with these commercial buildings that are worth nothing right now. And to just give you an idea of how bad this is, the loans on investor-owned commercial real estate and multifamily properties made up between roughly 25 and 55% of these banks' lending as of the end of 2023. So some of these banks are sitting on roughly half of these bad loans that people may have no intention of paying back. This is bad news. And they say on top of that, most of these banks that they mentioned here have a higher than normal exposure to loans on office properties, which are getting hit the hardest right now. Now I realize when a developer wants to tear down one of these old condos and build a brand new one, that's probably going to be a more favorable lending situation than somebody who wants to build a brand new office tower right now. However, that doesn't matter because of the fact that a lot of these banks are in big trouble. They have to watch their balance sheets. They cannot just be giving out all this money anymore for these companies to go out and make these developments, because they're already in trouble with the loans they already have. So that's the biggest issue that they're facing right now. They go on to say that banks with larger consumer and commercial real estate portfolios, especially office and rent-regulated multifamily, may see above average increases in credit costs. In other words, they could be on the verge of bankruptcy soon. And to make matters worse, S&P said that it now has negative outlooks due to sizable commercial real estate exposure on 9 of the US banks, or 18% of lenders that it rates. I'm telling you guys, this whole thing right now is basically just the perfect storm of everything. Like, just when you look at one isolated problem, like condos and commercial real estate, for example, you can see how it's all coming together beautifully. New condo laws coming into effect in a few months from now, and developers getting the green light to go ahead and buy up a bunch of these places. But are they going to be able to get the funding? Because we're on the verge of potentially several more bank failures pretty soon. I don't know, guys. It's going to be a wild ride to just watch and see how all this is going to work out, to be honest. I have no idea how this is going to work out or what's really going to happen, but I think it's safe to say that it's been quite some time that we've had such a chain of events line up in such a way that could spell disaster in so many different fronts, okay? And we're not even talking about the broader economy here or the rest of the housing market and all the perfect storms that are brewing in those sectors as well. You could almost say that the entire world and the entire economy is one perfect storm right now. So guys, if you own a condo, take the matters into your own hands. Find out if your building is financially secure, and if your board members are lying to you and saying that it is, but the numbers tell a different story, that's a huge red flag and a sign that these people could be in big trouble very soon. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.